Hello traders, welcome back to another Trade Your Way video. Today we're going to talk about the fibs again because people keep asking, and so we're going to do something very simple. We're going to apply the fibs on a chart. I'm going to show you how I use them and give you some ideas of loosely how we apply them to our 3 fib based strategies. So let's have a look. Okay, so top-down analysis in true fashion. This is how we do our analysis, top-down. What do we mean by that? Well, we start from the higher time frames. So this is a monthly chart. What's the instrument that we're choosing today? Well, it's pound yen. So pound yen. Pound pairs have been very good, very kind to me, very profitable over the last several months. Very bullish since Brexit was sorted out. So let's have a look. So this is a much higher time frame. So we are looking at a much bigger picture. You can see where the high is, you can see where the low is. So let's start by plotting our fibs. So we take our fib tool. I've got it here and I've put it as a favourite. Now, depending on your charting package, it will be there and it will say Fibonacci retracement. So you find it, you then put it on the last major high and the last major low. Some people will choose to use the body of the candle as opposed to the wick. They may even go so far as to do things like this. I've seen where, because you've got a head and shoulders pattern, head, left shoulder, right shoulder, so that's where they argue is that the move is developed or developing. It's all very good, can do if you want. Trading is subjective after all, so each to their own. Me personally, I'm going to keep it really simple. I'm going to take the last major high and the last major low. That includes every price level, every point that's been that the chart that price has been to. I want to include it. So that's what the monthly will look like. Now I've done this on the monthly. If you want to drill down to your weekly, you can do. If you only have one chart, so I'm going to do this based on just having one chart, I'm going to pull those fibs back. I've got them on there now. I know what it looks like. I know where everything's cut through. I can see this last swing high came up to just above the 50, almost touched, came within a whisker of touching that 61.8 before selling off. So I'm like, okay, it's sold off. So what do we look at now? All right, let's have another look then. Let's see where it's gone to. I'm interested in this price action. So this is my new range. So as we move along, we move right across the chart. We start seeing new highs, new lows. We talk a lot about fibs, this fib tool being dynamic. What do we mean? Well, we mean quite simply that once we've done this, established the high and the low, and we've got a new high and a new low, we want to plot new fibs. And this is where a lot of people make a mistake. They do this. They plot the fib one time. So in this case here, going up, great. But then they're not factoring in this move, so they're not accounting for this move, and so they can't measure this move. Because although they want to short it off that 50, it's all very well doing that, or off the 61.8, say they get in short in here, another head and shoulders type of formation, and they enter a short here. You want to know where it's going to. Where if you're using your fibs, where do you want to take this down to? Now, some people will automatically just do that. They'll do that as a target, and they'll do something like this. Makes sense, slightly above the last swing high. Okay, great. And the risk to reward looks fantastic, and we hear a lot about risk and reward. Brilliant. But if you hadn't plotted these fibs, so if we pull these back, for example, then how are you supposed to know where this is going to go to? So for me, I have what I call the 764 strategy. So for me, I would be shorting this down, and I'd be looking for my 76.4 to be tapped at around 135.49. I would always round up, and sure enough, it would hit, and that would be my T1. Now, where's my T2? Well, generally, my T2 is at my fib extensions. We're going to talk about fib extensions in a bit. So where's the next level? Well, it would be my 127.2, 127.2% fib. Below that is a 161.8 and a 176.4. It's a little zone, a little area where price could just break out, bounce off there, come back up to test previous structure, and then then sure enough, once it's done that, see if we can get it. It would basically just come down and do that. That would be your targets to the downside. So T1 taking some profit up here, T2 allowing it to retest the low, but with the notion of thinking, oh, okay, it looks like it's if it comes down here, chances are it's going to break and make a new low. So we'd want to know where it wants to extend to. Same to the upside. If we're going up, we want to know if it breaks the high, previous high, and it forms a double top. That's great. But if it breaks on up through, you want to know where it's going to go to. And you find that these fib extension levels are so accurate, they're so powerful, and they also allow you, so if price was to have sold off here and got all the way down to here, I know that I'd be looking for divergence. I'd be looking for exhaustion in that move. That's what divergence is, because then you'd start seeing things like this with the volume. So a decreased amount of volume where it's starting to dry up and it's going to go and test that zero line, might even then pop up above the zero line. This is the awesome oscillator, so AO, awesome oscillator, very powerful volume tool. Sometimes you'll see these volume tools on the side of your screen, on the side of your chart here, on the left or on the right, but in this example it's at the bottom. That's where I like to keep it off the chart, because I've got my fibs on here. So that's the move. That would be a trade that I would have taken. One trade, make some money shorting this back down to here at least. Now, once that's done, what do we do? Well, again, they're done, that's done, or leave them on there if you want. Drill down to a different time frame, like a weekly or a daily, up to you. But once it's done, I tend to move it. If a new high or a new low is being made, again, I will look to plot fresh fibs, so I know where the next potential levels are. So when we start scrolling right, again, this is a monthly. I'm going to leave it on the monthly for the moment. We have got this last high, which was that high we spoke of, which we shorted, and we got down to here. Now, with March, pandemic last year, COVID and all the rest of it, we actually stabbed down. We saw major moves, didn't we, last March 2020? So we actually took out the previous low. So we made a new low. So whereas I had my fibs like this originally for such a long period of time, and you can see the way that price has come up to that 38.2, rejected, and started its journey back down again to complete the N shape, and then gave you another opportunity to sell it again to complete the N shape, and then another, 1, 2, 3 opportunities to make money over a period of a few years, just being biased to the downside on a higher time frames on pound yen. Beautiful, until such time that we broke out of previous structure, and now we're bullish. And so what I did here is, this was relevant until we took out the low. So this needs to be adjusted because we made a new low. So that's what it would look like. Now again, based on the settings with your fibs, you can extend them or you can keep them like that. Entirely up to you, and you can move things around. Now people want to know, which ones do I use and why? Okay, so 38.2 plus 61.8 equals 100%. So all we're doing here is we're carving up our range into roughly a third and 2/3. 61.8 area up here is a golden zone, golden area of interest. That also happens to be where I have my 764 strategy, and is often I find that price gets up to about this area and then reverses. So it's a very powerful place to take a trade. Also, it's a very powerful place to target in terms of upside move in this case. Like I just explained in the previous example, shorten it to the 76.4 as my T1. I'd be looking for a long, a break of the 38.2, and I would be looking for a long. So with momentum, our MT strategy, a break of this 38.2, I expect it to react here because it's also previous structure. I'd expect it to do something like this, maybe. But if it doesn't, if it doesn't tail off and then just pierces on up through, then I would look for, I'd look for the 50% as the next upside, because this is a much higher time frame. And that's going to give us something like 700 pips. So it's, it's quite big. But the point is, on any time frame, you can do this on any given time frame, even a 5-minute chart, 15-minute chart. Take the range and plot your fibs, and then just watch how price, does this sort of price action. It'll hit, it'll bounce off, it'll get up. This is the move. Now, a lot of people, again, without any real idea of target, they will just basically say, okay, I'm just going to, I'm going to get in here, the break of that, which is fine, and I'm just going to take it all the way up and assume it's going to give you a pivot, a V pivot type move, like a U shape. It's just going to go up. Sometimes it does. Sometimes it will just explode straight to the upside and retest the high. It's wonderful when that happens. If you're in that move, great. Otherwise, you want to be realistic, don't you? You want to have a T1 and maybe a T2. So for me, I have 2 targets. So the first target would be ultimately taking it up to the 76.4. And then, as I said, my T2 would be fib extension levels. And that's how we would play it. So, these are the fibs. This is how I use the fibs. And so let me give you a more real-life example on a smaller time frame. So allow me to quickly move these fibs out the way now. or potentially even just delete them, and then just drill down to, I don't know, let's drill down to the 4-hour chart. Let's have a look at this 4-hour chart. Now, what are we looking for in this move? Well, we're looking for each time price comes down and takes out the previous low. So we want to see clean rejection. So there's one here. So because this is such a tight little range, I would probably drill down to the 1 hour and explore this range in a little bit more detail. Maybe even go as low as the 30-minute or 15-minute and do that. And then basically what we're seeing is price has gone up and then it's pulled back to 38.2. There's previous structure here as well, and then it's gone up again to give us a double top. Now if it breaks this high and starts going up, then it's still bullish. But if a double top or anything like this happens and we get rejection, it starts to curl back down, then ultimately I would be looking for lower than the 38.2, because we've already tested it. I'd be looking for something like a 50, a 618, and again ultimately the 764 down here. So that's how I would apply my fibs. Now some people, again, what they do is they get as far as looking at this chart and say on 1 hour chart, and they say, okay, yeah, there's the last swing high, there's the last swing low, which was lower than this one, it took it out, and so we want to plot our fib extension levels and our fibs, and we've gone up, and again bullish momentum. Our T1 would be the 76.4. Then the next target would be a break of the high, and as you can see, it just burst on up through, and it would be the 127.2. And then if there was divergence, which there appears to be on the smaller time frame, so volume is diminishing, we would apply a divergence strategy, and you could nick pips to the downside just by shorting it off the 127 back to the 100%, back to previous structure, back to the low. In this case, you can see it went up here and it smashed on down through, so it was a comfortable T1. And then T2, as I explained to you, would have to be the 764 down here. But this is as far as some traders get, because they have identified divergence, they've identified the move up, but now they want to take it short. So what do they need to do? What do you need to do? Well, you need to plot some fibs like I just showed you. Pull these ones back. So click here. Again, if you don't have the luxury to have multiple charts, just use the same ones, but just pull them back. They've played their part, but you want to see, you still want to have them in focus to some degree. That's fine. And then basically what you want to do is you want to plot your fresh fibs like I just did. I found that last low and I found that most recent high, and then I'm looking for 76.4, 149.50 is my first target. And obviously if it smashes on down through that, I'm looking for this low to be taken out, a bit of a liquidity grab, stops taken out down here, and for some shorts to be taken as far as these fib levels to the downside. And that's pretty much all we do, and that's how we apply the fibs. So to the upside's great, but then if you're looking now, it's done its business to the upside and you're looking for potential shorts, then you want to plot your range that way. And this is where people don't. They'll just keep these fibs on and they try and use them. So if we allow this to play out and see what it does, you can see once it's done that, I will remove that, and what's relevant there is well is exactly what we're looking for. Perfect double top, extended perfectly at the 127. We had signs of divergence, so our divergence strategy comes into play. We've done the MT strategy to the upside, and then we're using divergence for a T1, and then T2. We're looking for either 764 or down at these levels here. Again, you can be flexible. It depends how aggressive you are, and it does really depend on your risk to reward as well. So hopefully that gives you some explanations as to how we do this and how we trade. Let's allow it to play out a little bit, because then what I want to do is I want to find the next opportunity. So I'm going to leave these fibs on, and I want to see where the price goes to, assuming that I've taken some money off this move already. It's consolidating. Okay, so if it starts consolidating, all right, now we've just stabbed down again. So allow it to finish off the move to the downside. Is this going to keep going down, or is it going to find some support? This is where we start to question whether or not are we going to maintain bullish momentum, or are we just going to take out all of the previous stops and keep going, and then maybe find some support and go up. And you know, there it seems to be finding some support. Let's just pause it there for a minute. There we go. Clear rejection. This is a 1 hour time frame. Reversal candle, bullish. What do I do now? Okay, well, we've just established a brand new range. I can do away with this because that's played out. I've made my money. Let's explore this area now. Let's explore this range. So what am I doing? I'm plotting fresh fibs now. Again, I want to do this, and I'm interested to see previous structure 38.2. Got a double bottom here. Got some price action where everything's kind of folded, dropped nicely off. That's at around 148.56. Now, if we want to extend it, again, you can do this if you like. It's all just down to you. Let's see what it